Sebastian, are you in touch with Melissa?
She's in the room and she's talking. Hi, Melissa.
Okay.
Hi, can you hear me? Is
Oh,
that
there you
Sebastian?
go.
I can.
Got it. Yeah, I hear you. You look great. Go ahead and get your PowerPoint up. Melissa is the founder of the Stock Swoosh and creator of the Golden Gaps trading system, which pinpoints institutional money flow into the open stock market. After a highly successful career as a mortgage broker, she pivoted to full-time trading in 2008 and is now a stock market expert on networks like Fox News and Bloomberg. She also hosts her own television show, Make a Million with Melissa. Please welcome Melissa Arno and listen to her speak on trade on the side of institutional money in gaps. So, Melissa, how are you?
Wonderful. Let me see if you can see my slide here.
Not yet. Where are you broadcasting from today?
New York City. It's
Oh,
beautiful.
go to,
Gorgeous day.
I'm going there next week.
Oh, wow. I hope you're not going for the World Cup because it's gonna be crazy.
I'm going for the Book of Mormon.
Oh. Oh my God, the Knicks finals could be next week. Trump's supposed to be here Monday.
Oh, well, that means zero traffic will move.
That's
Last
right.
time I was there, Obama was in town and nothing moved then.
I would prepare yourself or walk everywhere.
Or Subway, yeah. So I see, what do you think about the SpaceX IPO? Are you putting your money in that?
I heard what you said, and I am not investing in anything with that. Again, I trade gaps, which I'll talk about in a minute, but the stock obviously hasn't even opened yet, so it doesn't have any trading history. And so I make decisions based on gaps. And even if it opens on the first day would have a gap would be day two. So maybe I would trade it, but I'm not going to do any long-term investments in this at this point. And again, my opinion on the market is, like you were saying earlier as well, the war is still really actually going on. So I think, even as many people want to end up buying into to the SpaceX thing and they believe in Tesla and they believe in Musk, the fact is that when Facebook first came out, I don't know if you remember this, a million years ago, that stock tanked. So they hyped up that IPO and then it fell and it took a year for that to recover. So I'm sort of a wait and see person on this one.
Well, the worst case scenario is that the stock opens at 150 or even 200 and then crashes
Yeah, yeah,
and just keeps going down and down and down.
yeah.
So that may happen, and that may happen next week.
And that kind of is what happened to Facebook. Actually, the first
Yeah.
year was 2013. If
Well,
people
that's
want,
also what happened to Tesla in 2010.
so I mean, I'm just like, I get everybody's hyped up about it, but I'm sort of like waiting and seeing.
Yeah. Haven't worked in the rocket industry myself. I would not pay a huge premium for any rocket company. You're one explosion away from a major sell-off all the time. But that's how Elon Musk lives. He thrives
Yeah,
on that
yeah,
stuff. He blew up four rockets before he finally got one to fly.
he's a risk taker, that's for sure. That's
He
for
is the
sure.
ultimate risk taker. A lot of people uh, make $300 million, which is what he made on PayPal, and they retire and collect Ferraris. Elon
Yeah,
Musk bets it all
yeah, yeah,
on starting Tesla and starting SpaceX at the same time. So
yeah.
that is Elon Musk. Anyway, you have until 5 minutes before the hour, and I'm going to go ahead and
Sure.
mute myself, and you have the floor.
Okay, great. Well, welcome everyone. Anybody has any questions, you can plop it in the room. I'm going to talk today about trading the side of institutional money and gaps. And again, summer trading normally could be slow, but I think we're going to have a busy summer this year. First of all, the whole year has been busy. Part of it is the war volatility, oil prices, inflation numbers. We have a new Fed chair, though, that we have a first meeting this month. Again, we're still in technically the ceasefire, but I think the war is really still going on. And now, again, we have a lot of IPOs out that are coming out this summer. So I think it's going to be a good summer to trade. Normally people go on vacation for the summer, but you don't want to miss this opportunity if you're going to be able to make money. And again, I trade in the morning. So I'm done usually quickly early in the morning. So I don't sit at my desk usually all day and trade. If you have questions, you can email me afterwards at melissa@thestockswoosh.com. And I was saying, again, that time is valuable. When I was working my mortgage job, which I did for 17 years, I was working 7 days a week. One of the reasons I wanted to get into a different career and then found out about trading was because trading is something that, first of all, even if you trade every single second the market's open, the market's only open for 6.5 hours. But I found that the biggest opportunities happen in the early morning in the market. So the market opens 9:30 Eastern time. Again, I'm in New York. So I usually trade between 9:30, 10 a.m., 10:15. Sometimes I'm done in 5, 10, 15 minutes. So once I'm done, then I have the rest of the day to myself. And again, that's very valuable. And as the years go by, I realize there's other things I want to do with my life. And I would say half my clients actually are people that are retired. So half my clients are working and they want to quit their jobs and trade full time, and the other half are already retired. And they don't want to sit at a computer for 6.5 hours a day. Also, your eyes get tired. You're staring at the screen and your brain gets tired. So I make money very quick and fast, and I'm going to show you those trades, or some of those trades here today, and we're going to talk about that. And actually, here is one of them. So we did target. Now I was talking about what is a gap. So let's go over what is a gap first. So this is a daily chart of target. This was back the third week of May. Stock closed here, gap down. This was an earnings gap. So that's the other thing that's going to happen this summer. We have earnings season starting after the July 4th weekend. So after July 4th, we have third quarter earnings where stocks report earnings, and then we have a lot of big moves in stocks. Some may be up, some may be down, but this was an earnings gap in target where the stock closed up here over 127. This was the 19th, then it had earnings, then it gapped down on the 20th, and we shorted this. So this tail here, we shorted it, we got in, got out. The entry was 119.35, exited at 117.90, had a great exit on this. I could have held a little bit more, but I like to get out fast, made 43.50. Now, this is a margin trade. So I run a live trading room every day. I trade live in the room. You could take the trades with me. You could have gotten this trade with me. The one thing that's happened, and this happened this week, is you can now open and trade at a retail broker anywhere in the US on margin without needing the 25,000 minimum. That's big for people. A lot of people, I think, gravitated towards futures tradings and different kinds of tradings and prop accounts because they did not have the 25,000. They've changed that. So you could go with 5 grand or 10 grand and open up an account at a registered broker in the United States and get margin and trade now on 4-to-1. So you'd be able to do obviously whatever size, depending on the cash you have. You could take 100 shares. You could take 50 shares, whatever, get in, get out. So that is something that has just started actually officially this week, which I think is very beneficial to day traders, and I actually think it's going to bring a lot more volume into the market in stocks. So I mostly trade stocks. Again, this had a gap down. So stocks gap mostly every day. Sometimes it's a nothing burger gap where you don't really do anything. Sometimes there's bullish gaps. So let's look at a bullish gap. Here's an example here where the stock closed here, gapped up, fell. But this closed at one price, opened at a higher price, then it fell. Okay, I did not do this trade, but I'm showing you this one that I did just to show you a bearish gap and a bullish gap. Now, gaps are made by what? Institutional money. So again, big money in the market is what moves stocks and also the market. So the market has been making a lot of brand new all-time highs this year, almost shockingly so, where a lot of people I think have been going long and making money. And then even if the stock dips or the market dips, then they buy again. Like today, we push back again. People really are getting kind of lazy about looking at their positions and making decisions now because people are just in this mindset that the market's going to keep going up forever and ever and ever and ever and ever. Every time I hear someone else talk on TV or have that mentality that it's going to keep coming up forever, it's actually making me more bearish, to be honest with you. So again, it's a very interesting time to trade right now because if you look at the overall stock and the overall market and the QQQs and the SPY or even the diamonds, we almost look like we've gone straight up. And the reasoning behind that really is all because of just one sector that's had a big run up. If you've been watching the stocks MU, AMD, a couple of stocks really have pushed the market up. It's just really one sector that has rallied. So when that sector is done rallying, anything could happen and the market could actually fall. And again, I was talking about the new Fed guy. There's a possibility they could raise rates this year. So again, institutional money is big banks, big traders, professional traders that are in the market. They buy stocks, they sell stocks, and they also short stocks. So again, it'll be really interesting to see how the market reacts with the very first Fed meeting with the first Fed chair, because Kevin Warsh, I think, first meeting is after the IPO launch. So it'll be the third week. It's the third week, I think, of June. I don't think he's going to raise rates now, but the words that he says is going to mean something because of all the economic data we've seen recently in the last 4 to 6 weeks, that there's a possibility I think rates could get bumped up this year. So we're just trading in a time where you really have to know what you're doing and you can't be lazy. And I don't think you should ever be lazy actually with your trading. It's great when you're making money and if you feel like you can never do anything wrong, but that's the exact time when you really need to be the sharpest. Because again, if you start to get lazy with your trading, as easy it is, you can make money for 5 weeks in a row going long and buying every dip, and you could lose it all in one day and one night overnight in a gap. And that's what happens to people. Again, you really have to know what you're doing in any market, but even particularly this market. So I also do options. Now for options, you do not need a margin account, just so you know. When I do options, I'm buying a call and selling it, or I'm buying it, put and selling it. That's how I'm trading it. And I'm trading it based on the movement of the gap. Now we went long IBM. I'm just going to show you this here. I did an options trade, which I sent out before the open. You can't do the trade till the open. It was on 522. We did the 270 IBMs that expired on the 5th. So 522 was here. So we did the 270s. So what happened? Stock gapped up. So I decided to go long this because a call is a long. And I'm saying, okay, this is a good gap. It's going to get bought with institutional money. Now, it took a little bit. So the trade was down actually until it went. And then it went boom. And then it went right in here and had this big move up. So again, got in the 270s and then it pushed up here, boom. And I actually didn't even hold this as long as I could have. I could have actually even held this trade longer. But it was still a huge, huge trade. The cost was $4.30. And again, I got in the day that it fell, and then it fell again. So I was negative in this trade before it went. An advanced trader risk of 20 contracts, which cost $8,600, sold it at 30, made $51,400. Return investment was 598%. Now, what if you did one? Or what if you wanted to risk around $1,200? You could have risked $1,290 and made $77.10. This is a huge trade. These are account changing trades for people with small accounts. Because again, you could do one contract if you want. You could have risked $430 and still made almost 600%. Again, what happened here in this chart? IBM got bought. Professional money came in, and the reasons I don't care. It doesn't matter to me the reasons. If knowing the reasons helps you and you like to study that stuff, fine. I don't even deal with fundamentals. I'm looking at the chart. I'm looking at the technicals, and I'm seeing that stock is getting bought. And then here's the big money coming in, and it explodes. And again, I could have even held this trade actually longer. But again, when you're up a lot of money like that, you have to take profits in something. So what happened here with the IBM? It got bought. It got bought. You wouldn't have a $20, $30 bar like that, big fat green bar, without professional institutional money in it. Okay. Now, again, we were talking about the SpaceX IPO. I might have a completely different opinion about that IPO if it opens like this. Again, that's not how Facebook opened when that came out in 2013. In fact, if we have time, I'll look that up at the end. But anyways, this is a good sign that it's strong, again, getting bought. But we were in it before the move happened, which is, again, the easiest way to get pain because sometimes it comes out of nowhere and you don't even realize it. And again, this had a gap up here, closed on here one day at 260, gapped up here at 270-ish, and then ran. Okay, so I do day trades where I'm trading on margin, and I also do options. Okay, but I'm not doing complicated options trades. I'm just buying the call and selling it, or buying the put and selling it. So when I started trading, again, I was looking for a different career, but once I started trading, I absolutely loved it. I didn't know what I was doing at first. Again, it was, almost 20 years ago, but I think once you've been bitten by the market bug, that's it. I mean, you want to do it. And I find a lot of people just jump around from thing to thing to thing, trying to find the best, get rich quick thing, Trading really isn't about that. You have to get serious about it. You have to take it seriously like it's a serious career, even if you're only going to trade for 30 minutes a day. You really have to think about what you're doing and care, care about learning, care about the decisions, care about the quality of your trades. I typically only try to do one trade a day, maybe two, but usually I'm only doing one thing a day. But the fact is, you can make money trading the US stock market. A lot of people lose because they're not serious about it. A lot of people gamble. There's probably going to be a lot of people that are gambling with the SpaceX. And there's been people gambling with this whole war thing too. So you don't want to gamble. That's not going to, you won't see longevity in this industry as a trader if you're gambling. But there's people that want to trade the market from anywhere in the world. There's lots of volume in the market. Again, I talked about the fact that it's open now, even for someone who can open up an account with a much smaller amount of money than they ever could before and have margin. So there's really opportunity for small accounts, big accounts, medium-sized accounts, for lots of people to trade. And even if you're working and you can't be in my training room in the morning, you could set the options up to buy the option into the open and then put a sell order. It would be a limit order, sell order, that if it hits the target, then you're out that day before 4. So there's just so many different ways that you can trade and make it work, even if you're still working a full-time job, or even maybe you love your job and you were in a different position than me where I wanted to do this full-time. Maybe you want to do your job full-time and you just want to trade for extra money on the side. So a lot of people want to do this. Not everyone's successful. How can you be successful? Again, this is a question I get asked all the time. You need a strategy, you need a focus, and you need a system. Again, I've been training for almost 18 years. It took me 3 years though to figure out the strategy that I use or the system I use every day. But the fact is, like, again, a lot of people talk about something, they say, well, this indicator and this indicator, this combination of indicators, that's not a strategy. You could say, well, that's a setup, that's a play, that's an entry, I'll get in here or out here, but that's not a strategy. A strategy is a foundation that you would, the reason for taking the trade. And again, my strategy is gaps. And I use that strategy to help me try to hit a bullseye every day. Because really, you only need one good trade a day in order to make money doing this. Yes, I have some trades that lose, but the fact is that I have more winners than losers. And some of the winners are big winners, like the IBM. So that covers the losers. But everybody has some trades that lose, and that's why I use stops. That's why I don't risk my whole account in one day. And I think when this market sells off, which it will. The one thing I can guarantee you for sure is the market is going to sell off between now and the end of the year. I don't know when. It could be September. It could be next week. It could be December 1st. I don't know. But the people that are saying the market's going to go up forever are dead wrong. So you need to know what you're doing, and you have to have a plan of action if you're in long-term positions, because again, I think a lot of people are, have different opinions about what's going to happen running up to this IPO because people need cash. I don't think necessarily IPO is going to crash the market, but I do think that the market is going to have a sell-off. Things don't go straight up forever, and they don't go straight down forever either. And so you really need to have your target set, and the whole idea of trading is to make money. Again, this is, you're in the position not for the rest of your life. Unless you buy something in your retirement account and you just want to hold it. Trading, what I do is active daily income generation. Get in, get out. Get in, get the move, get out. Get in, get the move, get out. Make the money, get out. Even the options I'm doing, which I'm doing the weekly options, again, I could have held that IBM longer, but I was up a lot. It's time to get out. That's how you have to look at it. Sometimes people get killed because they're in stuff. They think it's going to keep going forever, just like people think the market's going to keep going up forever, and then it doesn't, and then they get burned. And again, as easy it is to make money, it's as easy it is to lose money too. And I think the greed and fear are the biggest factors in that for people, why they tend to lose, because they always want more, more, more. You know what I mean? Any questions here so far? How are we doing? Okay, I'm going to keep talking. All right. So, like I was saying, you only need one. You only need one. There's no reason to sit for 6.5 hours a day. There's no reason to sit and stare at your computer all day. You can just get in and find a good trade and then let it run, let it go. So you don't have to like chop yourself up in and out of a million things. Years ago, when I started trading, there was commissions. Now there's free commissions almost everywhere. Some people charge commissions, but there's free commissions everywhere. But I used to chop myself up when I first started because people charge commissions. Everybody did back then. So, it's just so much easier and less stressful if you just find one stock and you get in it and you can get out of half, or you could hold it, or whatever you want to do, but you will have less losses if you're doing less trades. It's all about conviction. If you have a high level of conviction, it's going to help you stay focused. And again, you'll have less losses because you're not trading in and out, in and out. I also don't flip directions. So again, if, I told you the IPM here, I got it in here and then it fell and I was down in the trade. I didn't kill it and then flip it, boom, and then short it. No, that would have been the wrong thing to do. But anyways, I don't take the opposite directions in the same stock either. But trading is fun. Like I said, I run a live trading room and I try to make it fun, but it's not fun when you're losing. It's fun when you're making money and when you feel confident. And then it's also less stressful. I'm not saying that even I don't have stressful days sometimes. I do have stressful days sometimes. Sometimes I'm in a trade, it looks great, everything's fine. Trump sends a tweet, and then my trade flips around. That's part of trading. That's part of the reality of life and being in the market. That's why you need a plan of action, just like I was telling you before in reference to what's happening right now with the market. But there will be times when things happen that you don't expect, that you don't plan. You got to make a decision. You got to be on your feet about it. And you got to feel confident that you're making the right decision. I think too many people double down, or they don't want to say, oh, it's time to get out, or I have to take a loss. Sometimes you need to get out and take a loss, and you're better off doing that because you could lose more. You follow what I'm saying? And that's part of, again, being a smart, intelligent trader too, and being confident and understanding that the market has lots and lots of opportunities. And if you lose money in one trade one day or have one losing day, you can't blow up your account and think it's the end of the world. You could make money tomorrow and the next day and the day after that and the day after that. You have to look at it as a long-term goal that you want to do. Again, whether you want to do this full-time or part-time, it's irrelevant. It's the idea that you're going to do this and you're going to put your feet on the ground and you're going to say, I'm going to learn it. I'm going to get good at it, and I really want to be successful. But without a system, and again, like I was saying earlier, a lot of people don't have a system. It's very stressful to trade, especially in this market. And what most traders are doing right now, and I just have a clip here of just the last month and a half here, they're just going long the market. Whether the market's up, whether it's gapping up, whether it's gapping down, whether it falls, people buy it. It falls, people buy it. It fell today, gap down, people are buying it. Again, so like this is just laziness because it's not going to last, And so again, when I look at the overall market and I talk on TV about these things all the time, there's really only one sector that's been driving the market up. There's a lot of stocks actually that look like crap. A lot of things don't look great. And so again, we don't have earnings season until July, but it's going to be here before you know it. It's coming up in the next 4 weeks. So there's just so much going on right now. And while I do go long, like I went long the IBM, I actually prefer to short. So I prefer to short because short moves happen fast because stocks fall way faster than they ever rally. So yes, I'll go long, but I prefer to short. So usually in the morning, I'm looking for day trades that are dropping stocks to short to get in and out quickly. But getting back to the whole point of what I'm trying to say, if you want to be successful, it's important to have one strategy. It will really help you stay on point to make the money because that's what you really want. That's what you want. I mean, that's why you're doing this after all. You want the profits, you want the money, and you need something that's going to help you find the money every day. So I use a system. My system is called Golden Gaps. And I truly never knew this when I started. I didn't know what I was doing again, but I started trading and then I realized what a gap was. And I said, wait a minute, what's up with these things? And there's a lot of stuff out there about gaps that's on the market out there, other places, and really what they teach isn't true or doesn't work. And I found this because I really threw myself into studying gaps over 3 years. What I did realize very early on when I first started trading gaps was that they have big moves. As an individual trader, you don't have millions and millions and millions of dollars, when you start out, or at least I didn't when I started out. You want to be able to take 100 shares or 500 shares of something and be able to make money, be able to turn it over 100% if you can. So if you risk 500, you want to make 500. That's good profit. You need the stock to move in order to have that kind of profit. Scalping is very dangerous, particularly if you have a lot of size. Something can go against you quick and you never really make a lot of money because you lose a little, make a little, and you really never get anywhere. So when I started trading gaps, I realized gaps have big moves and that piqued my interest. is that I want to learn more about these things. Gap trading really is where the real money moves, momentum in the market take hold. Trading gaps makes it possible to trade and make money and trade for a living. And again, I just gave the one example of the IBM. I could have given a million, but the point is that that was a recent example. But the point is that's just such a striking example of really the power of the gap. Now, this was another one we did. We talked about Target. We also did Walmart. Again, this was a gap down. This was a short. Stock close here, gap down. So this was back on the 21st. So the 20th, the stock closed up here around 130 something and change. Gap down here the next morning around 124 and change. Open, dropped, fell. This actually continued falling. Actually fell all the way down here into June 2nd. Came all the way down here to 112. So from this initial move, it fell 20 points. And that's a big move in 2 weeks for Walmart. So this was a short. Okay, so we did a short in this. And again, you could buy a put. A put is a short, which is an option. You could do day trade on margin. You could have even done a swing trade in this. You could have just shorted it, boom, and gotten the drop and got out and set your targets. So, again, there's lots and lots. That was an earnings gap, yes. There's lots and lots and lots of stocks in the market. Again, there's a bunch of IPOs that are coming out this summer. You could get up in the morning and you could see thousands of stocks gapping. There's thousands of things every day. The market caps almost every day. If I, again, look at everything each day and I separate it out, the blue is everything that is completely untradeable. Can't predict it. It's going to go with the direction of the market, which you can't always predict either, or it isn't going to be available to make any money. In other words, really won't have that much volume, won't move, or you won't be able to correctly predict the direction of the move. Do you follow what I'm saying? There's a small piece of the pie every day of stocks that you can actually define before the market opens, the direction they're going to go, what stocks that they're going to have a big move, and you can trade. So institutional money is not buying every stock or selling every stock or shorting every stock every day that exists. You follow me? So again, if this is the whole market here, the most stocks actually go with the market direction. And you cannot always predict market direction. I mean, I gave one example earlier where I said Trump tweets and then the market can change up or down, depending what's happening with the war right now. So you might be in a great long position and then Trump tweets and it flips it. Because most things go with the market. So I'm looking for something where I actually don't need the market. So it doesn't matter to me, but I like I said earlier, I have been in some market trades. When I mean market, I mean the QQQs of the SPY, which I will do options in or day trades sometimes. And then something's turned around for me because of a tweet, or sometimes it's helped me. So you have to be aware of that when you have a plan, what you're doing, especially holding trades overnight. But I learned early on that there's less things to do than you think, even though there's thousands of stocks. So like people come to me, they never traded before, they're overwhelmed, there's so many stocks. There's really not that many good things a day to pick. And luckily, you only need one. Do you know what I'm saying? Because you should not be just trading 6.5 hours all day or trading a million stocks all day. There were trading rooms, I remember when I started trading, they were open all day long. It was impossible to even follow they had many different moderators. It was impossible to follow them or even do all their trades. It was ridiculous. Again, I try to make it easy for people to come to the room by only doing one thing a day, but I do that for myself because I learned early on doing too many things results in losses and stress, and it's just easier to find one thing, but you got to find a good one. And again, that's the whole point. The Walmart I did a put in. I did a day trade here. I did a put in the Walmart, and I just got the drop. But you could have got in and out here and just left it. I didn't keep trading this every day down here, if that's what you're asking me. I did not. I didn't trade that every day. In fact, I didn't really look back at that till today to see where it went. I kind of got off this. I could have done another trade in this, and I might at another point. But this actually, I just did it and got out of it. So with such a bearish gap with earnings, you speculate a follow through then further down. Every time I'm doing a gap, I'm taking in the direction of the gap. It's got a rate per my system, which I'll talk about in a little bit here. I have a rating system. It's got to rate 20 points or more per my 26-point rating system, or I'm not going to do it. So if you're asking me if I short every gap down, no, but I only short gap downs. If you're asking me if I buy every gap up, no, but I only buy gap ups. So not some people do the opposite of what I'm doing. They'll buy this for a gap fill. I go through 26 points to determine, is this going to fall? If it rates, and I'm just making this up, let's say it would have rated bad, this didn't, but let's say it would have. If it rated 15, I wouldn't have shorted it, but I also wouldn't have gone long it. I wouldn't have flipped it, just so you know. So I want to rate it, and if it gets a high rating, then I'm saying big money is going to dump this sucker today. Or again, in the case of IBM, they're going to buy it, and that is what happened in IBM. So again, you know, the key is to get in quick and early so that if you want to hold it all day or even all week, you've got a good entry, you can do what you want. You can do what you want. But again, and I was always talking about this type of market, any type of market, but particularly this market, you do need to book profits. You could be up a lot of money in a trade and get up the next day and it's all gone and you could be down. Okay. That is how it's going to set up, by the way. Whenever we do sell off, and I have no idea when, like I said, could be December 1st, people will be caught because they just think the market's going to keep going up forever, and it's not. You know what I'm saying? So one quality system and strategy really is all you need to pay yourself on a regular basis. Knowing one good strategy you can replicate over and over and over for profits can change your trading world. It really can. And again, that's when you're going to get good. Having one powerful strategy that pays you will open up your eyes to the true profit potential of the market so that you stop thinking like, oh my God, I can't do this. So many people are so negative. They say, I've taken a lot of classes, I've spent a lot of money, I haven't learned anything, I've traded, I've lost money in the market. Have you found anything good? Have you stuck with it? Have you really taken it seriously, or have you gambled? I mean, you have to be honest with yourself. Did you have an expectation doing a class that you were going to learn and make all this money when really it was unrealistic to begin with? You understand what I'm saying? So you have to also get right with yourself in your own mindset about what you've been thinking is possible. Yes, it's possible to make a lot of money trading, but you got to get good and you got to find a good system. And you still have to risk real money to do it, you know? You have to put your own money on the line to do it. But the market can offer you a real lifelong career if you have a strategy that makes money consistently. Professional gaps are a high income paying strategy because it's trading on the side of institutional money and they move big. So let's talk about what is a professional gap. A professional gap is a gap that moves in the direction of the gap. It is called a professional gap because professional traders and investors are making and creating the gap. So I was talking about this earlier in reference to SpaceX. I am not going to do anything with that day one. But let's say it opens similar to IBM. Let's say it gaps up and it runs up like a crazy person. You know what? That means professionals and big money really do believe in the company and Musk. And then it might gap up the next day and then maybe I will buy it. Do you follow me? So it's like that could happen. Now, that is not what happened with the Facebook. Remember, we were talking about that. But man, if something like that happens, now maybe it won't happen with the Tesla. Maybe it'll happen with one of the AI ones coming out. Like there's a couple that are coming out this summer. Could be one of the other ones, one of the two other AI companies that are coming out after the SpaceX. So, you know, something like that, I would stand back and say, ooh, you know what I mean? Again, you really don't have any history. I usually typically like to see at least a 1-year history to make a decision for something, but I'm not saying that I wouldn't trade something with a less than a 1-year history. You know, I have traded some new issues, I call them, you know, but not day one. But anyways, then people, you would say, oh, they believe in this. This really is going to go somewhere. In the case of a bullish gap, professionals are buying the stock. Therefore, the stock moves higher in the day. In the case of a bearish gap, professionals are shorting the stock or selling it. Therefore, the stock moves lower on the trading day. So again, this was a really good play here. So again, moved up. And on the day that I did this, I actually did 2 trades with 2 different expiration dates and 2 different strikes. I did the 270s and I did the 300s. And actually it could still be in the 300s, which I'll show that trade later, but I got out of it. So again, you can stack trades too if you do options for different dates, holding them, and then for different strikes. Again, that was, oh no, let me go back here. What I was saying. This got bought. So this is professional money bought IBM. Professional money dumped this one, or shorted it, but it fell. Again, I focus on reading the earnings. What did the Walmart earnings say? It doesn't have anything to do with me deciding to do this. Maybe the earnings were great. You can have great earnings, the stock can fall. You can have great economic data and the market could fall. You could have a war going on and the market's making new highs every 3 seconds. You say, well, that doesn't make any sense. You follow me? So, it's following fundamentals and earnings reports. If you like to do that stuff, that's fine. But you're not always going to be on the right side of it. You got to look at the price and what's happening with that. Anyways, like I was saying, I prefer shorting. And I prefer shorting because stocks fall faster than they rally. And I ended up naming my system the Golden Gap because finding gaps at rate high per my system is like finding gold to me. Again, IBM is just a great example of that. But they're professional gaps. They're gaps that have a high odds of working on the day in the correct direction of the gap with a large momentum move. And again, you need more winners and losers to make it as a trader. This does not mean that I buy every bullish gap up. Why? Some gap ups fail. Now, again, that's why I have the process where I go through and rate it. And again, some gap downs fail, like the market today. Market gap down today. If you shorted the market today, you lost. It rallied. I didn't see where we closed, but we were rallying. So again, I don't just, willy-nilly short every gap down. But the whole reason I developed this system was to try to look at something that had high probability, because I realized that there's thousands of stocks every day I could choose to trade. You're trying to figure out what to do. And I wanted to put the odds in my favor. And I said, well, I need somebody that's going to put the odds in my favor. So I feel like when I use this 26-point system, it gives me an edge. It's reading the price of the gap and using technical analysis. Again, I'm using technical analysis. You got to have live charts on an advanced level, and it pinpoints which stock to trade that day and in what direction. The high probabilities and the quality and detail in the rating system. And this is what I teach in my class. I teach once a month. It's a lot of detail. People say, oh my God, you get up at 3 a.m. No, I can do it in an hour. Okay. If you're new, maybe you want to give yourself a little longer. But really, it's like 5-10 minutes to rate one gap. And, that time that I spend doing the pre-work and getting organized from like 8 to 9 a.m., the room opens at 9, helps me trade, helps me make money, helps me do well. So it's worth it. Again, gaps are created with large institutional money. That's what makes a gap in the first place. The professional gaps that happen and play out in stocks are formed by one thing and one thing only, large institutional money. Therefore, you need a way that will help you pick the correct direction to play the gap. Because again, not every gap down can you short. Again, the market's a good example of that today. So I want to pick it, rate it, and then confirm that the large money will flow with it. By having a formula to rate and qualify the gap, you get confirmation and conviction that the large institutional money is on your side, and then you play it. And again, you could do it as an option, you could do it as a day trade. But gaps are an event, and they create a sense of urgency. Thus, an action is being forced by participants of the stock. This is why gap trading is incredibly powerful. And again, there's many things that create these events. It could be earnings, it could be news, it could be a war, it could be a new Fed chairman, it could be rates going up, it could be economic data, it could be an inflation number, it could be lots of things, it could be a plane crash, it's Boeing or something, you never know. Trading gaps is a powerful and profitable way to trade because you're trading on the side of power money, okay? So learning what to do and understanding what to do helps you make money. It's just the way it is. And if you're all over the place and you're gambling, you're not going to see the success you want, and you've got to get real with yourself about it. You don't want to make it harder than it is. Again, once you get into a groove and you learn something and you're on that path, even if you have a small account, you can build a small account into a bigger account. It's possible. Again, I've done it myself, and I've also seen other people do it. So again, this Walmart here, close here, gap down, fell, and we did a day trade. Now, this was the day of the 21st. Okay, this was after the earnings. 124.95 was my entry on the margin trade. and I got out at 122.60. It came down further though. Look where it went. Came all the way down, like 120 something. So again, I could have made more, but I got in, got out, had a great position, had a great trade, made $9,400, done. Take the trade, get in, boom, done. I don't like to mess around. And again, this is where you'd have to short the shares. You could have bought a put. Okay, you could have just bought a put at the closest strike, the closest expiration date, and then taken the trade with me in the room and got out. So again, it's just finding one a day. Monday, find one. Tuesday, find one. Wednesday. And that's how you do it. Instead of trading all day like a crazy person or watching the news or, again, it has to be very thought out, the process that you're doing to make this kind of money. Any questions here? Any other questions here so far? I think was it Patricia was asking questions? Patricia, do you have any other questions? Or anybody else? So again, I run a live room and the newsletter for the options letter goes to people's emails. But I've had people come that have never traded before and learn from me. I've had people that have been trading for older than I'm alive. And people learn something, even if they've been trading a long time, because what I do is very specific and very unique, And so again, I'm an expert in gap trading, and I think everybody wants to do is to make money, and everybody's made money. Even bad traders make money. You can make money in a bad trade, But the fact is, you won't consistently be able to do that. And so that's where people are up and down and up and down. And then when people start to spiral down and they're losing money, then they lose faith in the system and they get mad at the market and they say it's rigged. I guarantee you when the market crashes, whenever that happens, people say, oh, it was rigged. It was rigged, rigged, rigged. They rally it up just to crash it. No, the market's just living and breathing and doing whatever it's doing. And the reasons don't necessarily matter. Again, sometimes there isn't a reason. You can say, well, this doesn't make any sense when the market's going up straight up. No, but who cares? If you went long and you're in it, fine. I wouldn't go long here. I'm not long the Qs. I'm not long the SPY, Yeah, I mean, you're going to do research about gaps. Just be careful. Because again, when I was starting out, and ironically, it's still true now, the stuff that I was looking at, 20 years ago about gaps wasn't good. It didn't work. That's why I ended up having to develop my own system. Which I'm really glad I did. And again, I prefer to short, which I think also does give me a niche. But golden gaps can be used for day trades and options trades. So if you like options, you prefer options, you don't like the in and out quick ones in the morning, you can do options. I'm holding options for longer. And again, you can get some really big trades with options. Like the IBM, I held that overnight. Some people don't want to hold it overnight, but I'm telling you, sometimes that's how you can get the biggest moves. Again, when I take an option, I have a fixed risk. If I'm risking $8,000 or $9,000, I can't lose any more than that. It's a fixed risk. I don't have a stop. The stop is the risk. Like the number of contracts I have is what I have. I can't lose any more than that. When I'm day trading, I have a margin trade. If I put the stop at 150 and I'm short something at 149, if it hits over 150, I'm out, I'm going to lose. That's a limit order stop. But the big trades that I have, are, again, trades that I've tended to hold overnight. And again, the IBM was down. So it wasn't even hard to hold it. It was down. Like I wasn't going to kill it, So it took a couple days. And again, that's okay. That's fine. That's still quick to me. A weekly option is still fast. Gap fill hunt is not working a lot of times. You try to retracement, it just went further. Yeah. And again, there are times when something falls. I can't think of something right off the top of my head right now. Tired. I was up early today. I can't think of anything right now. I'll try to think of something at the end that reversed. Well, the market, but again, it does not work all the time. In fact, it loses more than it works, and many times what happens is, again, people are going long and I'm shorting the thing and then it falls. I mean, that's kind of how this thing's set up here. Just going to go back real quick. People were buying this here. I'm short this up in here, snug as a bug. Look where I shorted this here. Look at the high. I was short here at the tippy, boop. And this is why I'm very good at what I do. Like, I'm an expert in this. Like, I'm doing this in the 1 minute chart. I'm shorting the stock like almost at the high. And people are buying it from the time it opens up in here. And I'm shorting it. And then look at the money. So again, that's what people were doing here. What Patricia's talking about. who were trying to buy it for a gap fill at the very time I was shorting it. Anyways, we're coming up to the 250th America festivities. It's going to be very exciting. They're doing a whole thing with all these ships that are going to come down the Hudson River. I'm excited about that, July 4th. You know, we were talking about inflation, interest rates. I don't know what happens the rest of the year with oil prices and all these things. I don't know what happens with the war. I'm not a psychic, but I know that I'm in charge of my own life. So whether oil goes up, rates go up, food prices have gone up here too. I'm in charge of my own life. You just got to make more money. I mean, that's it. No one's coming to save you. No one is coming to save you. So you have to take the bull by the horns and say, I want to have a comfortable living and enough money where it doesn't matter to me if rates go up or gas prices are high or whatever happens. And that's really how you have to think about it. You have to be independent thinking. And I think a lot of people, when they start to trade, they are. That's why they gravitate to trading, but then they get beaten up and then they say, oh, you know, and people just don't realize maybe it's a little bit more work than you thought to learn how to do it. But that's okay. You still can learn how to do it, you know. Anyways, I have a system. It's called the Golden Gap 26-point system. That's what I teach in my class once a month. It's basically all on the daily chart. It's to find stocks to trade that have, number one, a high probability of directional bias for the entire day, big moves in the day, early confirmation of my bias in the move between 9:30 and 10, and precise entries with follow through, and a good risk to reward. So the whole philosophy behind it is to analyze a large time frame to make trend decisions on the directional bias for the gap. All large traders of every kind look at large time frames to make decisions, particularly institutional traders, which is, again, what we're following, to make entry decisions and exit decisions based on a small time frame. So I'm entering on the 1 minute, and that has a high degree of focus and accuracy, like the Walmart trade. And then using the daily chart to make decisions for the stock pick allows for accuracy in the direction. Using the 1 minute chart allows for good risk reward trades with accuracy. So I'm usually looking for 1-to-1. Like, that's my goal every day. Again, some trades are way more than that. Again, in an option, I'm usually looking for 50% to 100%. But again, some trades are more than that. Why? Again, IBM went against me before it went, and I don't kill stuff, you know. So the rating system pinpoints the opportunity to enter the stock before the big move happens. After, if you're entering it after it, you're basically have to scalp it, or it could go against you if you have a crappy entry, and then you can lose, or you're chasing it, and none of that's good. None of that's good. So this really actually was the biggest call that we had, and you could still be in this trade, but I'm out of it. So I did the same day I did the 270s. I knew it was going to go to 300. So I did the 300s. I gave it extra time to 612, which again, you could still be in this trade, but I got out of it. So this was this day. So on this day, again, I did the 270 calls and the 300 calls, and it went. So again, I gave this a little bit extra time. This made my whole month already. The cost was $1.50 because this was 40 some dollars away from the strike that I did this trade. That's why this was so cheap. Again, we're talking about small accounts. You could have bought 10 contracts and spent $1,500 and made $22,500. And again, there's people that did this trade with me and they held it. In fact, one guy held it longer than I did. I don't know what size he had. I didn't ask him. But again, 60 contracts. I've been trading again for almost 20 years, so I have an advanced trader risk of 9,000. You could have risked more. Depends how big your account is, what you feel comfortable. Made 135,000. It was a 1,500% return on investment. So this made everybody's month that did the trade. Now I will tell you, a couple people killed it. Why? Because it was down. If you find yourself killing a trade, you probably have too much risk on. So know that, or you don't understand what you're doing. Like, you might have done it and it went down and then you lost conviction. You know what I'm saying? But again, this is the whole point of learning, of doing a class like mine and saying, wait a minute, this is good. There's nothing wrong with it. Let it be. Give it a chance. You know, that's another big mistake people make. They don't, this was just a great start to summer, really, for us. Anyways, if you're at a certain age in your life where you're not doing well, and I talk to people all the time, again, people are frustrated with gas prices right now, for sure. I just went to visit my family. I'm from Pennsylvania. Uh, Gas was $4.66, the cheap gas. I was shocked. That's a lot for people that have a family and kids and 2 or 3 cars. Again, food prices have gone up in New York. It's because of the gas prices, because of diesel fuel. And I'm sure they have everywhere else. So I think, again, you've got to say, I want to do something different. I don't want to be a victim of the circumstances of other things in life. But a lot of times I talk to people, and again, people just feel frustrated, like they feel like they should be at a different place, at a better place. You can be, though. Just because you're not right now doesn't mean you can't be. Doesn't mean you can't change things or change your circumstances today, tomorrow, and a week from now. Things can change. Again, we talk about the same thing with the market. Nothing stays the same. Nothing stays the same forever. If you're in a downturn in your life or in your trading for the year, again, things can change, but you have to do something about it. It's one of these things where we'll see. We had the unemployment number this morning. Some of the claims were higher. Again, the market reacted to that today. That's one of the reasons we had the gap down today. But so some people are getting laid off. I mean, I think people are worried about AI. As much as people are excited about AI, people are worried about losing jobs because of AI. I don't know. I don't know what happens with that either. Today's world is not the same as 25 years ago or 10 years ago or even 5 years ago or 6 years ago when COVID was. Remember that? What we think is a secure job today may be gone tomorrow. Look at the world economy and the decisions the lawmakers are making for you. What is happening? Do you want to create your own future? Or do you want someone else to determine it? I don't want someone else to determine my future. It's one of the reasons that I decided to trade and then decided to start my own business. I'll never work for anyone else again. So again, we can be great employees, productive, outgoing, hardworking, and it may not even matter to our employer in the end if the company can't keep you on. This is one of the things that I think is going to be interesting to see. Like I said, the future, and I mean, I'm talking 10 years from now, or even could be 5 years from now with AI. If a company has poor management, they might fail, and it has nothing to do with you, or your industry might fail, and you could be a great employee. Again, remember when we had the bank collapse? That affected when I was doing mortgages. It was 2007, 2008, and then we had the bank bailouts, 2009. You can create your own job security by learning how to trade and invest in the market and do it yourself. You can create your own opportunity for taking it upon yourself to learn how to trade the market and make money trading. You can, but you have to have a good system to do it, and money management and a good attitude. And you have to have a mentor. You have to have someone to call the trades and teach you. And that's what I do for people every day. But once you know how to make money in the market, you can set your own course. You can live wherever you want. You can trade the US stock market and live in any country in the world. And that's very advantageous too. You just have to, it could be different hours. Patricia's saying that's why you're not excited by AI. It's hurting humanity, unemployment. Again, it's really going to be interesting to see what happens. Personally, I don't use AI right now. It always pops up for me, like to write an email or something. I can tell when I get an email if a human being wrote it or if it's AI. So I don't want to come across to clients like that or people. To me, I can tell, so I still am, writing emails myself, but that thing constantly pops up. So, I mean, but there's definitely, uses for it. I mean, they're talking about it in the medical field. That it could be helpful in the medical field. I mean, I'm not saying AI is bad. Don't get the wrong idea here. I'm just saying I think there's going to be some consequences that may not be positive, and I don't know what's going to happen then with that. Anyways, my system is called the Golden Gap System. The more often you make money on a consistent basis, the more confidence you will build in yourself. And then the more conviction you will have in your ability to trade well. Then you're going to be able to take a trade like IBM and hold it even if it's down and then make the money or risk more. One of the most valuable things that you learn during the Golden Gap course is to have conviction in the Golden Gap strategy. This conviction will help you produce positive results. And staying positive might be a challenge for some traders, but it's really a requirement. It's like number one. This is a requirement for success for anyone who wants to earn money in the market. You have to stay positive because you're going to have some trades that don't work. And then you can't quit or blow up your account. You need to have the right attitude. And if you have a good attitude, why not try to make it big? This doesn't mean it's going to happen in a week. Maybe it takes you a month. Maybe it takes you a year. Again, everybody comes from a different place and they have to learn different things, and everybody's a different learning curve. You know what I mean? So my system is called the Golden Gap. It teaches a 26-point professional bearish gap rating system. The purpose of this system is to help you evaluate which gap to trade each morning using a checklist. So this is a 26-point checklist. This is what I teach in my class. I teach a class once a month. So on the weekend, Saturday and Sunday. Saturday is the points, and then Sunday is the entries and the exits. You will learn the 26-point rating system, how to find the best stock to trade each day. It teaches chart analysis and technical analysis on an advanced level. This is another one we did here. I'll just quick show you. We did the INTC on June 1st. Again, close to your gap down fell. This is another one of the bunch of the ones we've been talking about that's helped to run up the market. But we did short this. I shorted this at 110.30, got out of it at 108.85, made 36.25, got in here, got the drop, got out, boom. That was June 1st. And again, it was a short. So again, this is a 1 minute, but I figure out the gap on the daily. And any questions from anybody? Almost done here, but again, being successful, I think it's empowering. No matter where you live in the world, no matter what you do, no matter how much money you want to make, trading can change your life. You have a lot more freedom. And you may have many reasons why you want to do this. Support your family, have a better quality of life, not have to work so hard. And again, it's a 26-point professional bearish gap rating system. It helps you pick what stock to trade. And again, it's all based on the gap. I'm a firm believer that less is more. You know, to get good, you have to get good and do one thing. And that's really what I've made an entire career on. And now I'm teaching other people to do it. So I'm reading institutional money and the price patterns and gaps, and you really don't need to do anything else. And then you will get good at that one thing. And then you will make money, and then you can add size. And again, it's a 26-point checklist, and the class is June 13th and 14th, 9 to 5. So it's not this weekend, but next weekend. Cost of the class is $6,999. If you're interested, you can email me. I'm doing a heron special. That's a little black crowned night heron in Central Park. Beautiful little bird. I see him in the morning. The Heron Special is going on until Friday, 6/5. If you sign up for the Golden Gap course by June 5th, again, the class is next weekend, receive 1 year free in the trading room, 1 year free of the options newsletter, and 1 year free of the market report, which is a good deal. So you get the class and you can trade with me for the next year. Mary says, love your transparency and authenticity. Thank you. Well, I am a New Yorker. I am a New Yorker. I guess it's in my blood. Any last minute questions? You can email me at melissa@thestockswoosh.com if you think of anything else, or if you're interested in the class. Have a wonderful, wonderful, wonderful weekend. Tomorrow's Friday. And think about what I said.
All right, Melissa, thank you very much. Great presentation. If anyone wants to take advantage of Melissa's offer, the link is in the chat box on the right. That'll take you to a dedicated sales page, which is only available today.